Hey everyone, and welcome to today's show on Wealth Strategy Secrets. Today we have a special guest. We're joined by Eric Rice. Eric is the Chief Growth Officer of King Operating Corporation. He started his business career in Chicago in wealth management for high net worth clients before spending almost 2 decades building his own businesses. Along the way, Eric worked with founders across multiple sectors to create profitable, enduring enterprises, demonstrating a keen eye for the nuances of markets and corresponding growth opportunities. His real-world market experience has made him a sought-after partner for entrepreneurs and investors around the globe. Eric currently lives in North Dallas with his wife and 2 children, where he runs his own part-time ministry and coaches baseball in his free time. Eric, welcome to the show.
Thank you for having me, Dave. Appreciate it.
Yeah, I've been really looking forward to this discussion, Eric. Ever since we've had the opportunity to meet, you're always opening my eyes to, new ideas, and just you've got really a wealth of information from your background and everything. So maybe we can start there and tell the audience who aren't really familiar with you, talk to us about your background, your journey. It's very diverse. Give us kind of a sampling of that.
Sure. Well, as a kid growing up, I was a baseball player. So I played through college and a little bit after college. And, for me, it was always a valuable tool in life. I thought that's all I could do. I kind of came from modest beginnings. So playing a sport was kind of the dream. But baseball is a very good lesson to learn. Baseball players become very good business people because we understand if we fail 70% of the time, we'll actually be successful. So it allows you to be a little bit more aggressive. So out of school, I was one of the first people hired on campus. I went to Indiana University, and I started managing money with American Express, and then I went to Raymond James and Morgan Stanley, and realized that it just wasn't the path for me. The constant client service and things like that. There was just something inside of me calling out to do something different. So I actually moved to California from Chicago and started my own businesses. So I've founded or co-founded 14 companies in the course of my career. Many disastrous fireballs at the end of the runway. Entrepreneur education is expensive. Some successes, a couple exits, couple public exits. And along the way, I've learned some very valuable things. And I've been in so many different industries because businesses are businesses at the end of the day. So I've gone from alternative financial services and things like that, all the way through gaming and social media companies, machine learning, AI. My last venture was in quantum biology. So we were actually applying quantum mechanics into biological entities to increase performance. So pretty diverse background in the things that I have done professionally. I'm terrible at talking about myself, by the way. So
yeah, and Eric is being super modest with everyone, but you have been a public company CEO as well, correct?
Yes. Never again. Never do it again. Anyone who's done it will say the same thing.
Yeah, for sure. That's a whole different animal, and pretty difficult to achieve that. So
yeah, to do that and raise 2 kids is a pretty trying time. So, but valuable learning experience, and something I wouldn't take away from or regret ever in my life. It was valuable learning experience.
Right. So, as a wealth manager early on in your career, is that when you got really exposed to the world of, investing and business? And, did you learn some initial, things that you wanted to cover from kind of a wealth perspective at that point?
Yeah, I kind of took to it right away. I still remember being in my Series 7 class. Anyone who's done that, you kind of get, it's you and 10 people in a training class to take your test. I still remember the study sessions. It kind of took to the information. I was done with my Series 7 in an hour and 41 minutes, which at the time, the lady in the building said that's the fastest I've ever seen it. Because I knew I can get a 70. You didn't need a 70. I think I got 79 on it. But I was three drinks deep by the time the rest of the training class was done at the bar downstairs celebrating. I just took to it. I understood the nuances in money pretty quickly. And I started servicing some interesting client bases. Like I was actually the manager for traders. So guys who were trading bonds and commodities on the floors in Chicago. I built a lot of trust with them because I let them know early on, I'm young, I'm learning things. I was in my 20s. I didn't want to pretend that I was, 45, which I am now, with all this experience and understand actually how things work. But I committed to being a student of my client base and understanding what they wanted to achieve. And over time, I looked at it again, everything in life, I'm a believer. So I believe God puts things in your pathway to teach you. And every encounter, every career move, every child, every good experience and bad experience has a lesson to be learned. And the thing I took away from, and I rose pretty quickly. I was a top 30 under 30 and all those types of things. But the thing I learned most about that venture, managing money, was understanding that in order to do management of finances correctly, you really do need to know something about everything. It's very difficult to be a specialist. You turn to specialists for deep, really relevant questions for a scenario, but understanding bits and pieces of everything allows you to have all the pieces together to really put a puzzle together from someone. And it's kind of ironic, almost 20 years later, that experience is coming into play today, because it's built in my mind that I need to understand a little bit about everything in order to figure out where I stand, so I can figure out where I'm going in the future.
Yeah, interesting. And would you say that today, you're more really driven by your entrepreneurial expertise or your investing expertise, or is there a fusion between the two of them?
Well, I don't know if I'm an expert. I'm kind of the jack of all trades. Really, right now, the thing that drives me is my desire to serve. It's the reason I'm in oil and gas. It's the reason I do what I'm doing right now. It doesn't make any sense that I'm in oil and gas with my background. It's mostly technology and science, and it's a need to serve. So I want to be able to take kind of the skill set that I have, which is taking massive amounts of disparate information and making sense of it. And if I can help serve people by filling voids in their knowledge gaps and help them make more informed decisions, then that's what I feel called to do pretty regularly. I mean, that truly is a church group I'm in right now. We're going through what's your God gift, and it's pretty hard to answer that question. So everyone else in the group said, you understand so much stuff and you make it very simple for us to understand. So I assume after 12 people confirming it, that's kind of my gift. And I think right now that gift is very important, if it's a gift at all. It's kind of who I am.
Yeah, so that's a perfect segue, Eric. And I know you and I have had a couple of conversations about this, but there is so much going on in the world today. We have a war going on between Russia and Ukraine. We have this runaway inflation train that we're trying to deal with, that the Fed's trying to deal with and manipulate. We really have an energy crisis, across the globe, and there's a lot of uncertainty, right, in the markets. So, maybe you can talk to a little bit in terms of, putting all those pieces together and, what does that really mean from your perspective?
Sure. Well, that's actually part of my journey. So in late 2020, I was in Los Angeles. And if you're watching this and you're in Los Angeles, I loved the time I was there, but it definitely changed over the past 4 to 5 years significantly. And during the pandemic, I was actually working on a therapeutic, which is now submitted to the FDA for COVID, which they botched our trials a couple times, which just doesn't happen. I started picking up trends and seeing what was happening in the economy, in politics, in society, and started understanding that there's so much to learn right now. My wife kept saying, what are we going to do next? And I said, we need to know where we stand before we can figure out where we go. And so I actually handed back my shares in the company. I actually lost a significant amount of money doing so because I felt called to. I got my children back in school. I moved to Texas. I don't make any bones about it. I'm an American. I don't believe in Republicans or Democrats or conservatives or liberals. I am an American, and I wanted to get my kids into a good school system. So for about 14, maybe 15 months of my life, I volunteered all over the country, meeting with experts. I started my own little, I guess, chat or podcast, whatever you'd like to call it, which actually grew pretty large. Before coming to work here, I actually was considering doing it professionally. And I had started taking in a ton of information. I've been a history studier my entire life. I love history. And if you understand history, you can understand the future a little bit better. So if we look at all the things that are happening right now, just kind of breaking them down and understanding the truth. In order to understand why something is happening, you have to look at all sides of what the end result will be. So if we look at, say, Russia and Ukraine, which is actually technically not a war. It has never been called a war by anyone except for people outside of Russia. So Russia has actually called it a special military operation. And for those who paid attention to it from the very beginning, you will find that the Lugansk and the whole Donbass region actually invited Putin in to liberate them from genocides occurring in Ukraine. These are, I'm not making this up. This is, you do a little research and you'll find this information. That's one area. Inflation, perfect point on inflation. Inflation was at 1.9% when Donald Trump left office. We're at 8.6%. Inflation by itself has been a tax that has been designed to eliminate the middle class, which is the ruling class in America. So if you eliminate the largest class and you get rid of their financial status and you get rid of their means of freedom, it's easier to control that population. And if we look at what's happening in geopolitics all around the world, America is not unique. What's happening around the world is truly happening around the world and in our backyard. We are in the midst of, and you can call this an opinion if you like, but I don't believe it to be an opinion. We are in the middle of a global tyrannical takeover all around the world. Tyranny is imposing itself upon free people, and tyranny they don't come in with tanks and guns. They come in with legislation and law changes and minor tax code changes and raising rates. Because the thing that scares me the most right now, Dave, is the fact that about 3 days ago, Guy Kiyosaki spoke in front of about 2,000 people and on video and said we have in America, the best possible outcome for where we are economically right now is a depression. That's the best outcome. The worst outcome is a civil war. So when we talk about finances and understanding where we are, it's important to go through all the topics. So if you don't mind, I can run through a few of them.
Yeah, absolutely.
So number one being inflation. Inflation it's one of these terms that is used often, like the term fascist, right? That most people don't really understand. So we have the news, everyone's calling everyone a fascist, right? Like that seems to be the modern word. Fascism is a collaboration, by definition, is a collaboration between government and corporations. So if we look at that and study it, we'll understand it a little bit better, which kind of indicates we live in an era of fascism, right? Like they don't like what you're saying, they call Twitter and they censor you. This is not an opinion, this is a fact. Now, when we look at inflation, people think of inflation as rising prices. Not rising prices. It's the decline of the value of the dollar. It's a way of making the pieces of paper that are in your pocket worth less so that they extract more for the same basic goods. This is a way of eliminating a middle class or a powerful class in a free nation. That's what inflation truly is. Now, inflation hasn't changed. They haven't changed the way that they actually mark and track and determine inflationary rates since the 70s. And if you remember in 1971, that's when we went off the gold standard, right? So going back to that era. So since we've had paper money, we've had inflation. I mean, these are just historical markers to look at. And, being a believer, the word coincidence doesn't exist in the Bible, by the way. There are no coincidences between removing the gold standard on the US dollar and the creation of inflation, which comes in fiat money systems, which is what we live in. Even pull a dollar bill out of your back pocket, it says Federal Reserve debt note. It doesn't say money or currency. So when you have the ability to print money constantly, you have the ability to create the value of the money. You have the ability to dictate the freedom or the free will of people. So when they come out and say that inflation, and just to give your audience an understanding, and I know we're way past kind of the basics, but people do forget some of the basics. When you look at inflation in September being 8.6%, right? Not really that big of a number in the grand scheme of things, despite it being 1.9 2 years ago. That number is actually determined on markers from the 70s. So they're not equating modern economics into the inflationary number, which keeps that number very low. The true inflationary number, a lot of analysts predict, is around 24 to 25%. And that's based upon simple values with the price of gas, price of bread, price of eggs. Eggs are up 38%. I love eggs. Eggs are up 38%. Gas is still up 44%, even though they keep telling you that they're making it cheaper. And we're definitely going to go into that in a moment. But if we look at inflation, it's a marker from last September. So from last September to this September, compared to last September, it's up 8.6. The previous September, I believe the number was 6.7. So you add those two together, you have a 15% inflationary trend. So the way that we understand the terms, they throw a lot of information out at the public, right? There's a lot of information. It's hard to keep up with it all, which is why I've been doing what I've been doing for the last 2 years, is just taking it in and helping people understand and get some clarity in my own world and then sharing it with other people. So inflation is one thing. The other interesting thing right now, Dave, is the fact that we are facing times that have been seen before, but never at the same time. The convergence of the events that are happening right now have never been seen. We've seen inflation. We've seen massive interest rate rises by the Fed, but we've never really seen those two together. The scariest thing on top of inflation to me is the term recession. Now, Jamie Dimon just came out the other day and basically said, hey, I think we're going to go into a recession in 2023. Well, very revolutionary, Mr. Dimon, because we've been in a recession for over 65 days. A recession, by definition, is 2 consecutive quarters of negative GDP growth. We're in our 3rd right now. And the 4th one previous to it was a 0. We went from 0 growth to negative growth to negative growth to negative growth. We are in a recession. I actually agree with Guy Kiyosaki, kind of hard not to. His results speak for themselves, that we are going into a depressionary era. So if we look at a recession that we're in with massive inflation, which those two normally go together, the one thing we've never seen before is the Fed raising rates into a recession. The danger involved in that is catastrophic. It truly is. So not only will it be hard to utilize and leverage the cash that you have on hand because of inflation, it'll be extremely expensive for you to borrow to be able to fulfill the needs of the modern person. Now, the stats that we have that most people don't pay attention to, look at credit card debt in America right now. In the 2nd quarter of 2022, $64.1 billion of credit card debt was added by American consumers. That's 4 times the amount of debt that was created after the Great Recession of 2008. 4 times. That puts the average American, which is single family, $50,000 a year, $200,000 house. They now have on average $9,000 in credit card debt. This means, and if you look back at like Michael Burry, the Big Short, his predictions have been pretty accurate over the course of his career. And he recently came out in like June or July and basically said, by Christmas of 2022, the average American household will have 0 discretionary spending money, 0. And he also said that by October, Americans would be in such severe credit card debt, they'd be approaching what's called a breaking point. The breaking point is if the average American household gets to $12,000 in credit card debt, they literally have no money to spend. With no money to spend, rising rates, more expensive goods, going into 2023, it's hard to imagine how the stock market is up. Now, the weird thing is we're already in this environment. And for the last 3 weeks, we've already seen 3 800-point days. And the best part about this, Dave, is I was a trader for a while. I talked to traders all over the world, and I keep telling them, I'm like, listen, they're like, where do you think it's going? Where do you think it's going? And I'm like, well, and George is sitting here. I actually told my team 3 weeks in advance, I go, the Dow's going to hit 28.7. And it did within 2 days. Because if you look at the charts where we are right now, they're almost identical. The S&P and the Dow are almost identical to 1929, 1987, and 2008. Those are facts. I'm not trying to scare anyone. I'm not a fear monger. Do what you want with your money. But the stock market generally goes last. Most people don't know that we have what's called a plunge protection fund, which takes taxpayer dollars and feeds the market to keep it from crashing. This is a fact. Look it up. So we're seeing these prop-ups of the market, the stock market, daily. We're seeing that. We saw one yesterday, right? Like, so when they called me and said, "Oh, you're totally wrong. The market's not going down. It's up 800 points today." I asked one simple question that everyone should ask in every possible scenario in their life. Okay, why? Explain to me why the stock market's up 800 points when we're seeing the highest inflation, interest rates rising, 30-year mortgage at 7%. New home sales down 41%, 82% new home purchase indicators over the last 12 months. You're looking at a pending crash in real estate, or bubble bursting. I don't want to say a crash, an absolute crash in the bond market. The sovereign bond market globally is probably the scariest scenario ever imaginable in economics. These are sovereign bonds. These are bonds from nations. We in our business, we talk to investors every day, and recently we've been getting, well, I'm just going to go into T-bills because that sounds safer than what you guys are doing, which I'm not going to argue with, but I do kind of throw one thing out and say, okay, so you're going to buy debt from an institution that's anywhere between 31.1 trillion and $263 trillion in debt. The United States, we don't even know how much debt we're in. We have no idea. The Fed and the Treasury have never been audited. We actually have no idea how much debt our nation is in. What we do know, if the low number, $31.1 trillion, is the number, we know that's about $12 trillion past the bankruptcy number for this country. So you are going to borrow, you're going to lend money to a bankrupt nation as opposed to putting money into our oil and gas deal to drive monthly revenue. It's a conversation I have all the time. So if we look at all of these different factors, now, if you want to, I'll get into geopolitical issues because those are far more interesting than just economics. And they all correlate. They all correlate. Everything that's happening right now today, you can put 50 different points of disparate information together into one bucket, shake them up, and you come to the same conclusion every time. So I'm sorry, I talked a little bit too much.
No, I think this is great, Eric, because again, right, it is right, trying to make sense of all these things. And I think sometimes, we often hear a piece of news, right, and we're kind of looking at it in isolation. But this is really great to get the context of all of these broader things, and then how do they relate to one another, and then ideally we're going to get into some type of solutions here and how people can actually prepare for themselves. But let's talk about geopolitical risk.
What if everything you thought you knew about investing was wrong? Would you like to create a wealth strategy like the top 1% have and get exclusive access to top private equity deals that provide downside protection, tax efficiency, predictable cash flow, and have a lucrative upside? Discover how with the Pantheon Advantage and join our investor club today at pantheoninvest.com.
Sure, and I've got a list. I actually did some homework for you, Dave. Normally I keep these things on the top of my head. But here's some interesting, I'm just going to run off raw data and raw facts, then we'll go from there. So inflation at 8.6, we covered that. Interest rate hike, there's definitely they've already announced another rate hike of 0.75. That's going to put a 30-year fixed at 7.75%, essentially eliminating 81% of all potential buyers of new homes. Super important to understand. You have a recession, which is actually on the verge of depression. Now, if you remember back in 2008, I was in the markets in 2008. In 2008, same thing happened. We were in a recession, and they kept saying we might be in a recession soon. And then all of a sudden, one day they said, oh, our fault. We've been in one for like 4 months, and all those people you called crazy, they were actually right. So we're seeing this again. History repeats itself. Credit Suisse, it's the 4th largest bank in the world. They're now selling off all of their U.S. assets. Deutsche Bank was raided on tax fraud in Germany yesterday. They were raided for tax fraud, massive manipulation, stealing from the German government. This stuff isn't new. It's just now being disclosed. Bond yields are going at an all-time high, and all your listeners are investors. So what happens when a bond yield goes up? The price goes down, the confidence goes down. So the media loves to spin it and say, oh, yields are at an all-time high. That means confidence and the ability to pay back the money is at an all-time low, right? So looking at things from a different lens is important. Stocks make no sense right now, none. The whole market doesn't make, usually when the stock market goes up, gold goes down. When gold goes up, the stock market goes down. They all move together. The non-corollary assets are correlating. That doesn't make any sense. The largest energy trader in the world stopped trading energy 30 days ago because he said nothing makes sense to him. That's the largest energy trader in the world. I went through Michael Burry. Here's an interesting thing to think about, because we can talk about markets and investments all day long, but the thing that you can actually control that's right in front of your face is understanding how the Fed works and how it works against you. An interesting stat came out just today, about an hour before we got on. Currently, in 2022, 19.6% of the whole GDP of the United States comes from tax collection. 20% of what our country claims as gross domestic product is our money. 19.6, that's an all-time high. The only time it's been this high, ironically, since we're on the verge of World War III, was in the 40s during World War II. So all these things kind of make sense when you really put them together. The SPR, we're definitely going to go into the SPR and understanding that. That's a travesty what's happening there. But OPEC has announced they're reducing oil by 2 million barrels a day. Russia has announced they're dropping oil production by 2 million barrels a day. The United States is 1.6 million barrels per day in deficit, not by choice, but by administrative commands and legislation and executive orders. And right now, I'm going to before we get into the SPR, this is something I talk to people about all the time. We get lied to. There's no way of knowing exactly how much oil is left in our Strategic Petroleum Reserve, the SPR. But an interesting stat to keep in your head when you hear whatever number they want to give you today, the United States alone uses 18.6 million barrels of oil every day. Every day. So when they say I'm releasing 10 million barrels and that's going to save, that's going to, vote for me because I'm going to lower gas prices. That's not even a day's worth of oil, by the way. And they're saying right now that we have 300 million barrels left in the reserve. If you divide that by 18.6, that means that we have 16.129 days of Strategic Petroleum Reserve on the verge of a war. That's where we are. That's kind of I guess that's the basics of where we're at. So that's all the stats I wanted to get out to you today.
Yeah, no, that's really helpful, Eric. And, one thing I find, right, being in this space is, you really have to find information sources that are objective and that you can trust and that can tell you the entire story, right? Because all of the things that you're just talking about, you're not seeing on headline news, right? In the papers or the primary media outlets. And furthermore, I mean, the majority of the media outlets, right, they're owned by two big firms, right? So they are controlling the message.
Well, there are actually 6 true media companies in the world that own all the other media companies, 6 total.
Right, which are owned by Vanguard and Blackstone. BlackRock. Yeah. So it is very interesting, right, that, the message is being controlled for what you want to hear. And similarly, right, you came out of, private wealth management, right, back in the day. And it's the same thing, right? As we get into investing into real assets and all these things, there's things like, tax deferring is a great thing to do. Meanwhile, you're just kind of kicking the can down the road and you're going to be paying ordinary income tax rates, right? At a time where, you're going to probably have no offsets. They make the assumption that you're actually going to probably retire with less money. Right. And that's why they're saying to defer the taxes. So do it now. Right. So there's a lot of things I think that are put into our head, right, between, political leaders in place, corporate America, right, Wall Street, right, that all have certain agendas. So I guess I'm just trying to bring to the point here that these are really objective data that you put on the table, right? And it may be eye-opening for some, but I think it's really important for all of us to be taking in some of these critical facts right now and trying to make some type of assessment on how do you position yourself in your own business, in your personal economy, with your family, right? And what is the best thing to do? So do you have any type of guidance there? How are you preparing, for some of those events to, hedge, as an investor, as a business owner, as a family member?
Well, yeah, let me pull one up here. So I just put this together because I think it's going to be part of, I like to be factual. I mean, I can sit here and be theoretical all day. It doesn't do anyone any good. Always been a factual person. Right now, we live in an era where, there's what's called a saculum. So society moves in these 80-year cycles. Each generation of 20 years has it's evolutionary. You should get into understanding generational turns. We are at the end of an 80-year cycle, and I won't go too deep into it. It's not really relevant for this show. But the last time we were at one of these turns was around World War II, about 80 years ago. And in that era, you had Weimar Germany, which was kind of the pinnacle. I mean, Germany is the industrial and financial center of Europe. Europe is where the world used to revolve around until World War II. Then America is where the world revolved around. So we're kind of the new Germany. Looking at history, the Weimar era is the era in Germany where you see people taking wheelbarrows full of Deutschmarks to go buy one loaf of bread. That's what hyperinflation and depression looks like. Now, one of the things I've been telling people for years, for about, well, not years, 18 months, so a year and a half. Right now in this market, number one, you want to be tangible. So you live in the era where paper money, paper investments, equity papers, these things are all vulnerable and susceptible to market turns. They're very easy to manipulate also. One of the biggest areas that, I'm in oil and gas, so I'm going to mention that because it's been on my list for 18 months, even before I started working here. But I've been telling people for 18 months to buy gold, silver, and Bitcoin. Bitcoin kind of is digital gold. But gold and silver, platinum, palladium, copper, any sort of actual tangible physical assets have a new place in the world. And I say this because if you look at the BRICS nations, which is Brazil, Russia, India, China, and South Africa, now also including Saudi Arabia, all of these nations are teaming up to create a competitor to the US dollar for supremacy of global currency. Now, will there be two global currencies? Probably not. Will the US, I don't know what's going to happen. I don't have a crystal ball, but I do know that there is now, for the first time in 80 years, competition to the US dollar for global reserve currency domination. And I do know that in Russia, they are pegging their ruble to gold. So if nations are going to switch back to a gold standard, that means they're going to have to buy all the gold that they can from open inventory. Now, Russia has been buying gold heavily. So has China, so has India, so has Japan, ironically, who has really confusing currency. But they've all been buying gold on the market for the last 14 to 15 years and really heavily in the last 2. So since Biden took office, the gold reserves in multiple countries around the world have tripled and quadrupled. I don't know what that means. If I did, I probably wouldn't be on this podcast. I'd probably be sitting on a beach somewhere. But to me, it kind of indicates that the world is going back to physical, traditional, tangible goods standards. Now, silver is an interesting place to be because the COMEX right now, the COMEX silver dropped to 38.8 million ounces. That's the lowest level of silver on the COMEX since September 28th, 2017. There's a very strong move happening. I'm sure you've heard of the GameStop and AMC, the short squeezes that were occurring. That started about 19 months ago in silver. I've been buying silver and gold since I moved to Texas. And those things are wealth preservations. They're not designed to make you rich. So why am I buying gold and silver? Why am I advising people to buy gold and silver? Well, to me, it's pretty obvious with interest rates doing what they're doing, the average American running out of money by Christmas of this year, the massive amounts of credit card debt, sovereign bond failure, corporate bond yields that are going through the roof. You're looking at a complete downfall of the debt structure system in the world, not just in the United States, in the whole world. So if debt falls apart, cash becomes important, right? But while that's happening, your cash is losing at very minimum 8.6% a day, right, from inflation, at a very minimum. So take the big cash positions and put them into something that won't lose, right? Yes, gold fluctuates, silver fluctuates. But the simplest understanding, I did this for my son, I do this for everyone else. My son's 13, he came up to me, he goes, "Dad, what's inflation?" I go, "What have you heard inflation is?" And he goes, "It means the stuff costs more." I go, "Do you think that's true?" And he goes, "Yes." And I go, "You're wrong." And he goes, "What's inflation?" And I said, "Well, in 1971, our dollar used to be the equivalent of that amount of money in gold. But we decided to not do that anymore. So back then we took all the gold, which is at $20 an ounce, a $20 bill is equivalent to an ounce of gold. That's how it worked. And then we sold it all off to the rest of the world for $35 and everyone was really happy. So let's take $35. So in 1971, if we buried in the backyard, if we buried 1 ounce of gold and $35 and we dug it up today, the ounce of gold is worth $1,650 and the $35 is still $35. And that's how inflation works. The interesting thing about metals is that JP Morgan just had almost a dozen traders, including the head of trading for metals, that were not just arrested and indicted, they were convicted for over 20 years of metal market manipulation. This just happened. You will not see this on CNBC or MSNBC, but it just happened in Chicago. You can read the whole article. That means that the metals market has been manipulated for a very long time, right? That's a logical deduction we can make. Now, the silver side of things is really interesting because traditionally silver has a gold to silver ratio throughout history. Usually 16 ounces of silver equals 1 ounce of gold. Well, the world that we live in right now is completely opposite. It's about, 98 ounces of silver would equal 1 ounce of gold. So if you just look at that traditional balancing act of 16 to 1 and it's now 92 to 1, you have a very undervalued asset. Why? 2.5 ounces of silver are used in every solar panel. Every solar panel has at least 2.5 ounces of silver in it. Every electronic device that you use, every one of these things that you use, they all have silver in them for conductivity. So in my head, make your own conclusion. It's pretty obvious to me for at least the last 20 years, someone has been manipulating the price of silver to make it very cheap for places like China to manufacture green energy products, solar panels, electronics, so that someone else would profit by a cheapened commodity for better performance. It's just my theory, but that is a pretty accurate one. So silver is interesting. Gold is interesting because we're starting to see, I mean, all you have to do is do some digging and you will find out, like you're not gonna be able to go Google page one. They don't want you to know these things. I promise you, I've been in this a long time. When you start looking around, you will start to see that nations all around the world are buying up gold. So if they're buying up gold, they're reducing the supply, which will eventually increase the demand. I just explained to you the COMEX is the lowest level since 2017, meaning there's less supply and there will be an increased demand. So if we look at economics and where to go in difficult times, you go to environments where there is less supply and more demand. So that leads me into my third and fourth suggestions for people. I've said for over 18 months before I even worked here, oil and gas, gold, silver, oil and gas. Why oil and gas? Well, I won't go, most people can see what's going on in the world with oil and gas, but I can get really detailed, and we'll do that at the end because I don't want to be too self-serving, I suppose, in the conversation. But oil, find a more valuable commodity on planet Earth right now than hydrocarbons. I dare you. There's nothing more valuable. Ask anyone in Germany, anyone in Europe, anyone in Africa. They're going to get hit hard next. But we're looking at mounting wars. When you have wars, you need hydrocarbons to fight wars. So oil and gas, gold, silver, oil and gas, raw land, undeveloped land. You buy a house right now, it's pretty much set in stone. You're going to lose 15 to 20%. Just kind of where the housing market is. You buy a commercial building. Say you buy a developed building. Commercial buildings require businesses with high profitability to be able to pay rents from you to be able to make a profit. Well, with rising interest rates, so you can't borrow money, and rising inflation, so you can't make a whole lot of money, or rising taxes where you don't keep a whole lot of money, a developed commercial property doesn't make sense either. But raw land does, because it's expensive to develop today, but in the next 2 to 3 years, that raw land will be much cheaper, especially if you have gold, silver, oil and gas, and Bitcoin. You will get through these rocky times and be able to start doing development projects again. I deal with a lot of syndicators in this job, a lot of real estate, single family, multifamily developers, and that market's getting pretty thin. So, which is good for us because we work with them and we can provide oil and gas solutions to their clients and their customer bases. But that's the 5 areas I would focus on.
Yeah, that's really great, Eric. So let me ask you this question, right? As an investor, then, I mean, can you just give us a ballpark? And again, you know, we don't provide financial advice on the show. We're not CPAs or financial planners, but, you know, just in rough estimation, you know, for a portfolio allocation, you know, given the climate that we're in right now, you know, how are you positioned, or what would you say?
Well, yeah, I certainly don't want to give financial advice. So I'm again, a couple of years ago, I gave away everything and served the nation. So I literally took 14 months of service. I didn't have a job, I was literally giving up my own time and money to fight for freedom in this nation. I know for some of you out here that may sound weird, but give it a year and you'll understand why I did it. So in my rebuilding, my portfolio is a little different. I won't give advice to anyone because it's your money, do as you please. But with me personally, I take a percentage of every paycheck and I put it into our fund, period. I want the tax write-off. I want to be able to fight against inflation with monthly passive income. And you know, the growth multiple makes sense to me. So I do that. I also, and anyone in this office will testify, that I go down and buy physical gold and silver twice a week. So twice a week. It may take me a month to find somebody who has silver, by the way. They're in the real world application, you'll go to 4 or 5 metal brokers and find many of them don't even have silver. But I'll go buy gold and silver. I'm getting ready to purchase a piece of raw land. So I'm eating my own dog food. And I'm putting a percentage of every check that I make into Bitcoin. I have zero exposure to the stock market except for certain short positions. Zero. I have zero. I mean, it's when you look at the charts and you understand history, you know, by the way, 1929, 1987, 2008, I believe, I know for sure too, but I believe all three of those market crashes occurred in October, ironically. But when you look at history and you look at the charts, the exposure in the stock market to me personally doesn't make sense. And I'll say this because I look at the media and I look at the market. So I'm not in the stock or bond market at all. Well, I can't say at all. My wife has a 401k. So that you have no choice but to be in stocks and bonds. However, we moved half of it to money market and the other half will probably go to money market next week. But when you look at what's happening, like just today, this is, what is today, the 20th of October. Just today, the market's kind of leveling off stock market and the bond market today. Everyone said, hey, the first articles that came out from 8 to 10 in the morning, where the yields are at an all-time high. This is a great time to get in. And then the articles that came out, the headlines that came out later were, you know, despite the Fed raising rates, this is still a great time to get into bonds. It's almost like they're begging you to make mistakes. So I am completely detached from the debt market, completely. And I use my cash. I convert cash as quick as possible. I don't have much cash. It goes into metals or it pays off debt. So I'm paying down my home. I have a 2.25 mortgage on my house, and I'm getting to a certain level, and then I won't pay it down anymore at all because it's cheap money. But other than that, I am absolutely steadfast in my positions of gold, silver, oil and gas, raw land, and I don't want to say me it's Bitcoin, but there's a million. I'd say cryptocurrency, and here's why. As we go into these inflationary, it's pretty obvious to me that either good or evil is trying to destroy the dollar. I mean, is that too conspiracy theory to think that when the other side of the world is creating a competitive currency to destroy, someone's trying to destroy the dollar. And that would essentially destroy the power of the United States, because really the way the dollar has worked is, hey, you're going to use the dollar. No, I'm not. Okay, we're invading. That's kind of how the dollar's been brutally enforced around the globe. And now that we have this special military operation or war in Ukraine, which is escalating to nuclear levels, when you start getting into environments that are this geopolitically scary, you want to be as inflationary resistant as possible. You want to be as stable and as tangible, physical as possible. So the only thing non-physical that I'm putting money into is crypto, and here's why. You have three types of money. The third was just created 19 years ago. So traditionally, you've had God's money, which is eternal money, gold and silver. You have the devil's money, which is fiat currency, fake money, debt notes. And now we have the people's money. So we're in a centralized system right now, Dave, meaning that the internet is centralized, so it can be censored. The Fed is a central bank, meaning most people don't know the difference between centralized and decentralized. Centralized means used by all, controlled by few. Decentralized means used by all, controlled by all. That's the difference. So tyranny can impose itself in a centralized system. We are now in an era coming from technology. I know tons of guys, we have decentralized satellites that are up in orbit right now, creating a decentralized internet. There are decentralized cell phones being created. Decentralized everything means nothing without decentralized currency. So I look at gold and silver and oil and gas as kind of the stable baseline, you know, maintaining wealth, looking for normal type returns. But my kind of moonshot on the other side, where I'm taking risk, is more in the crypto side of things. Because as we become more digital as a society, especially transactionally, the more important it'll be for us to get out of a centralized currency system. Everything that's happening in your life due to politics is because we are in a centralized, fully controlled environment, meaning that few control all, kind of like the Roman Empire. The way that we get out of this is by using decentralized assets like cryptocurrency, and I have some Bitcoin and XRP and a bunch of the other things. But you know, you have to have some there. When the US dollar, I don't want to say when, if the US dollar, I believe when, but I'll say if the US dollar collapses, which at this point isn't, 5 years ago, it would be ridiculous to say that out loud. It literally would be ridiculous. Today, it's possible. I don't know if it's probable, but it's certainly possible. When that happens, the world will flip upside down for a moment and then set itself right. So I want to have some gold and silver so I'm safe and secure. I've got tangible things, but I also have some cryptocurrency kept in a cold wallet in a safe that will act the same for peer-to-peer transactions and actually should appreciate. That's my moonshot. That's my risk. I'm not taking risk on a stock at all. You know why? How do you run a company, or how do you make goods? How do you package goods? How do you drive those goods to a shipping center, a distribution center, and a store? And then how do you buy them and take them? You need oil and gas. Without energy, there is no stock market. Without cheap energy, there are no profits. Without abundant energy, there is no freedom. A nation needs food, water, and energy. 3 basics of a nation. And our water is a little behind. 97% of the world's water is owned by Nestle. That's not good. We're going through food shortages and supply chain issues that will probably never be repaired. The COVID-19 pandemic globally destroyed supply chains, destroyed them. This is something they will not talk about in the news. But I talk to guys all over the world. Supply chains in 2023 will be a major, major issue. It takes about a year for them to kick in. So food and water, there's a risk. Energy is being attacked by our government. I don't know any other way how to say that. Kind of obvious to me, but that's the areas that I would focus on. Does that make sense?
Yeah, that makes a lot of sense. I mean, so much to unpack there. Wish we had another hour here to keep going, Eric. And I think we're going to have a repeat performance here, maybe next quarter or something, and kind of see how things are going, because really appreciate this kind of global perspective, right, on all of these dynamics going on. And again, it's really, more from this unique kind of objective perspective versus what, the media is kind of feeding us and wants us to believe, right? We have to kind of put aside that information and really try to make educated decisions. But as you said in the beginning, I mean, this is a super complex problem, right? And there's so many different variables and dynamics. So, I really appreciate your insights and your time today, because I think it's definitely shedding some light. And, we want to, as, being good stewards of our investors' capital, right, we want to be able to educate people, our audience here, listening to this, our investors, on how to prepare themselves, how to position themselves, make educated decisions, look at all the data points, right, so they can be in the best position to win.
Absolutely. Absolutely. It was a lot of fun too. I had a lot of fun. Thank you for having me.
Yeah, super. If anyone would like to, connect with you directly or learn more or anything, what's the best way, Eric?
Good question. I don't know, I'm not going to put my phone number on a podcast. I'm generally an old school person like that.
LinkedIn
Yeah, I'm on LinkedIn. I'm Eric Rice 25 on LinkedIn. And my email is erice@kingoperating.com. So you can reach me at any of those, or through you. They can reach out to you and you can get a hold of me either way.
Definitely. Eric, thanks again for your time. Really grateful for the opportunity to connect. I know I always get smarter every time I have a conversation with you, and I know folks are really going to enjoy this episode. So thanks again.
Absolutely. Thanks, Dave. Have a good one.
You
God
too.
bless you all.